Good day, Jérôme.
Hello, Bjorn. How are you?
Fine, thanks. In recent weeks, we've seen that the international financial markets have been quite volatile. What's been going on? What are the causes?
I think there are two causes we can pinpoint. The first is the discussion about whether there is a bubble in AI and all the arguments around that. The markets seem to reconcile it with the fact that valuations are still okay. So that's stabilized. The second is the upcoming meeting of the Federal Reserve, where there is uncertainty around what policy they will implement. And I think that's causing some volatility as well.
Yes, talking about that meeting, it's scheduled for next week. Now, we know that the governors, of course, will look at the state of the economy. What is your assessment?
I think it is really a polarized affair. When you look at the state of the economy, you have several places that are going well, others that are going less well. Look at, for instance, investments. There are a lot of investments in AI infrastructure, but on the rest of the investments, it's a subdued situation. If you look at, for instance, the consumer, inflation is going up because of the tariffs, but the labor market is not that strong. So that's another thing. And then the economy goes okay, but the property market is not that good. So it's a polarized world. And I think that explains why the Council of the Governors, the people who make the decision on interest rates on the 9th of December, why the Council is really divided.
Yes, it seems a very complex situation. What do you expect of the meeting?
We think, if you ask us, the Fed will stay on hold, mark another pause, and maybe be attentive to inflation. But that doesn't mean that monetary policy will not continue to ease next year. They will just have a small pause, acknowledging what I've just said, and continue cutting rates next year. Our view is that they will implement another 2 cuts in 2026.
Now, taking all of this into account, what is your stance on US stocks and the US dollar?
Our stance is that we stay positive on US stocks. At the face of it, they're expensive, but the expensiveness is really driven by the technology stocks. It's a situation we've been known for a while. If you look at the rest of the stocks in the US stock market, they are much cheaper. So I think that's one of the reasons why there is still a possibility that these other parts of the US stock market, so aside from technology, will do well. And on the dollar, our view is that because of the fact that the Fed will continue to cut rates next year, maybe stay on hold now, we will have a situation where the dollar will not be strong. And we expect it to weaken a little bit against other currencies.
Jérôme, thank you very much, and see you back next year to follow up on all of this.
Thank you, Bjorn.